Welcome to the Scalable Real Estate Investing Podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Clement. Hi everyone, Mason Clement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? That basically you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. Hi, Scalable Investors. Thanks for tuning in to another episode of Scalable Real Estate Investing. I'm your host, Mason Clement, and today we have Vlad Arakcheyev, who is with Zontik Ventures. They've scaled to over 500 doors in multifamily, and wanted to have him on the show to discuss what that journey looked like and how he went from a W-2 employee to now running this very impressive portfolio of multifamily assets. So let's jump into things. Vlad, what's going on today?
Yeah, thanks. I'm really excited to be here. It's, Tuesday, so I'm pumped. I had a really productive day so far. So, I'm looking to do a few more things by the end of day.
All right, good to hear. Yeah, I know there's always that what do you call it, thing that people ask, like, what does your perfect Tuesday look like? And I always wonder why is Tuesday selective? I guess Mondays are all scatterbrained and trying to catch up on whatever, but what does your perfect Tuesday look like? I'm just curious, your daily schedule.
You know what? I'm so tired on the weekend because I'm running around with the kids. I'm doing chores and things like that. So whatever I have planned for the for the weekday is just like so perfect because my day is planned out completely, right? From morning to pretty much 5 p.m. So like today, I heard a great thing about marketing. This is awesome. If you haven't offended anyone by 12 p.m., you're not doing enough marketing, which I thought was perfect. So by 12 p.m., I already called like 15 people, so I don't think I offended any one of them, but it was a really good like mind shift where, hey, listen, start early, don't wait.
Okay. Yeah, I guess that could be interpreted as offending people on social media marketing or cold calls or whatever. So what kind of calls were you making or people you reaching out to?
Yeah, so I am a real estate agent here in New Jersey, right? In addition to being a multifamily investor and syndicator, I am an agent here in New Jersey. So yeah, I do call people here trying to sell their houses as well. And right now I'm in a brokerage. And actually, I'm not going to say we specialize, but we have pros in our brokerage that actually focus primarily on the difficult cases like the foreclosures, liens, violations, probates, things that typical realtor doesn't want to touch. Not because, I mean, it's difficult because you have to negotiate with the lender. They take long time to close, and there's so many obstacles in that period of beginning to end. There's just so much going on But we like those. I like them. And the why is because not only I get to learn this challenging process, I can also take what I have learned and move this into multifamily space. If something similar happens in multifamily, I'm like, boom, I already had experience with that. So, I don't want to just cruise, right? I don't want to just go with the flow. I want to go, harder. I want to have 5 steps above the competition. So if something like this comes up, I'm like, oh yeah, I dealt with it before. I know it. I dealt with a case that it was just it was impossible. It could not close. We closed it. It took 8 months. The question is how many other people would like stick out and write the thing out. For me, it was by the 6 months, it was just an adventure. I'm like, hey, listen, I spent so much time on this thing. Let's go. I didn't even care about I care about the money, yeah, but I just wanted to see it through. So,
Okay. Do you ever wholesale houses as well?
yeah, yeah, that's how I started my real estate career. I
Oh,
started wholesaling as well. To be honest with you, I do not like wholesaling that much. And I mean, yeah, if you know what you're doing, you can make money fairly quickly. You can scale, I guess, fairly quickly as well. But there's two things that I noticed that are pretty negative. Number one, if you stop prospecting, everything dries up, right? You have no more income coming in. So you gotta keep on doing it constantly. It's like a hamster in a wheel. You gotta keep on going. You cannot stop. Additionally, the whole tax thing, right? So if you wholesale a house, it's $20,000, let's say your fee. I know it's pretty high, but let's just say 20. You're gonna have to pay 10 to the IRS. So there is no depreciation because you're not holding anything. So you have to find another way of deferring taxes or saving on taxes, whatever the terminology you want to use. So um, that and one more thing that I just actually thought of, a lot of wholesalers, they don't look at it as a team sport because technically it's not. You can be a lone wolf and be a lone wholesaler, and you're competing against other wholesalers, and you're also competing against other realtors. So it's the same space. So it's kind of a like, hey, listen, you got to move quickly. And I really don't like that much. I like to work as part of a team. I'm more of a team player where I rely on my team to do certain tasks and they rely on me. Like I'm good, let's say, at raising capital, right? So I'm not gonna ask another person to do it if they're great at negotiations or let's say creative financing, right? Each person does its own thing. Where in wholesale is just you do everything unless you really scale and you're like one of the major players. And there's few things that you gotta be aware of, like clouding title and make sure that you're not being undercut and not daisy chained. Oh my gosh, I'm thinking about daisy chaining. It's just something. I'll tell you a quick story. So I got a house under contract. It was in New Jersey. I'm wholesaling it, and I thought that guy was a buyer. Guess what? The very next day, that guy posted my house on Facebook and he said, hey, listen, flippers, come over, take a look at the house. So I reach out to the guy and I'm like, listen, I thought you were a buyer. What are you doing marketing my house? He's like, well, listen, that's okay. If I sell it, I'll get some money and you'll get some too. And I'm like, oh boy, what do I get myself into? So since then, I'm not a huge fan of wholesaling. Not to say that I'm not gonna do it or anything like that. I'm just not a big fan.
okay. Yeah. For all those reasons, it's exactly why I'm trying to transition out, but not for houses, but for land. It's been interesting and I'm still working on some deals, but that one thing you said there is really accurate that if you ever stop, then your pipeline stops and your income stops. And so it's just really easy to get burnt out. And I've tried to scale up and build out a team of virtual assistants and all those different things. And it's very challenging, at least for me, managing remote workers in the Philippines and other countries. So that's actually why I got this office behind me, because I wanted to have someone, at least one person, work with me, just literally look over my shoulder and do things. But now I'm at a point where it's like, all right, I just need to actually work with a team, like you were saying, and just buy cash flowing assets that I can offset the income with depreciation. So why don't we just take a step back a little bit and talk about how you got into multifamily and what your real estate journeys looked like and what brought you up to today?
Yeah, everything started during COVID, pretty much. So I was a graphic designer. I got furloughed at my W-2 job, and then I have kids, wife, mortgage, expenses, and I don't know when my paycheck is coming from. What's happening? Am I fired? I was in limbo, and then my wife and I we were thinking, hey, listen, let's try real estate. I'm going to become an agent, and because people have to buy and sell houses, it doesn't matter what the market is, whatever else is happening, right? So even though I got called back, I started taking classes at night online. I've taken the whole course, it's 70 hours of real estate, and I got my license. So I started selling houses here in New Jersey. That took me on a path to wholesaling and doing flips with partners because I don't know much about construction. So I found a house, it was a good flip. I found a partner at the local real estate investment event, and they did the construction part for me, and then we sold it together and split the profits. So it was a win-win. It works, but the same thing. I mean, right now, flippers, they're hunting for houses. There's not much inventory out there. I see it. I see it as an agent. So that took me to, another path where I'm thinking, I want to buy something. Let's buy a regular house. So I bought one, and it was cash flowing great. It was cash flowing $1,000 a month net, which is awesome, right? A lot of people are like, oh, this is the best thing ever. But scaling part, I wanted to scale quicker. And also, I was managing it myself. And maybe that was my mistake too. I was receiving calls in the middle of the night. Oh my gosh, the flood, there's a flood here. There's a raccoon on the roof. And there's no joke. On Friday night, there was a raccoon on the roof, and I got a call to chase it away. I'm like, you can't be serious, right? They're living in the middle of the woods. And then there was water issues and pressure. I mean, there was so many things. And I said, listen, this is not for me. We got to look at something else. So we got these tickets to a multifamily event in Houston, flew to the event, and I saw 1,000 people sitting in the room, all multifamily investors owning, I don't know, hundreds of doors, some thousands of doors, doing all kinds of stuff. And my eyes were just completely opened on a brand new world, I should say. And after that event, everything changed. I needed education, I needed mentorship, and I needed connections. So for that, I figured that you should have a coach or a mentor. So I interviewed, there's many out there. There's multiple people that offer coaching. I interviewed them all, and I picked Jake and Gino. They are multifamily uh, mastermind, if I should call them a mastermind. It's Jake and Gino community. And that's how I got started. I was educating myself, connecting with people and fellow members in the Jake and Gino community for about 8 to 9 months. And that's when my very first multifamily deal uh, happened 8 months later.
Okay. And was that something that, like, how did that work? Did you find that deal and then bring some of your connections in to help raise capital for it, or what was that process like? Because that's obviously the
Yeah,
most challenging thing is in that first deal.
Yeah, it was actually, you know what I thought? Everybody says, oh, you find the deal and then the money is gonna come and the team's gonna find. That's such, oh, that's such nonsense. I wanted to curse, but I'm keeping it PG. It's such that doesn't happen whatsoever. Listen, find the team first. You have to know everything before you even start. If you find the team, for example, in Atlanta, right? Do you have a team there? If you don't, how are you going to operate this deal? How are you going to buy it? How much money do you need? Can you raise that money? I mean, can you find people that you can rely on? These are the questions that you should be asking. So team comes first. So I identified a market, right? So my market's Texas. And then I found few people in Texas, connected with them. And of course, now I know, a lot of people in Texas, and I clicked with few of them, right? We clicked the way we work, the way we operate, and then we formed a team. And since then, it took about, I should say, 6 months or so to vet them, and they were vetting me, of course. So we see how we work together, right? If we really click, if we have the same work ethic. And after that time, we started looking at deals. We started underwriting. Right now, we're underwriting, I don't know, 6 deals per day. So far, just this year, we underwrote fully approximately, that's what my friend just told me, approximately 1,300 deals. So we in a process to purchase two. We got one last March, and working on another one. So it's a process. It takes much longer to find the deal in this market, which is totally okay. You just got to be patient and really like grind it out. But yeah, find the team first. Make sure you like them. Make sure you know them, and and have the same values, and just go for it. Yeah.
What was that process like being across the country with these different people in Texas? Did you like fly over, or is it just Zoom calls over 6 months?
Yeah, honestly, I flew there, I don't know, 6 times. You don't really have to fly that much. I mean, in our community, funny enough, we have people living in New Zealand buying stuff here. There's one person living, I think he's like almost in Hawaii or something like that, and he's buying in Arkansas. So you don't have to really be here. You don't have to even be in the same country. Me being in New Jersey, we have daily Zoom calls, or maybe every other day, and we discuss deals that we looked at. We discuss things that are happening, things that we hear from brokers, insurance. I mean, that whatever it is. So we jump on Zooms, and we spend an hour each morning just discuss what's happening, what should we focus on. We also use online resources like Asana uh, to kind of scale. I mean, not to scale, but to manage our deal flow. And it's really easy. Then we have Slack for chatting. So it's really easy nowadays to have all the tools that you need to stay in constant contact with your partners. They can be across the country or even across the world. So don't let that stop you from, buying deals. You can buy them. Doesn't matter where you live.
Okay. Can you explain kind of the different roles that your team takes on and like how large is your team that you usually work with?
Yeah, absolutely. When it comes to roles, it varies. In my experience, it varies depending on the deal. We purchased few JVs, right? Joint ventures. So one of the deals that we purchased is in Sarasota. It's land. We're actually selling it now. So what we're doing is we're looking for a developer basically right now. So we purchased a single family. I mean, sorry, a regular. Oh yeah, it was like 4 units on it. So it was, I guess, multi-residential, whatever you call it. It's not commercial. And we are converting it, actually finished the conversion to multifamily. So now you can build 96 units on it, right? So we are not builders. It's a JV. And now we all participating or giving our time to different things that we're doing to basically sell it. So what I'm doing is I'm working on OM. I'm working with other investors trying to bring in potential developers. And also, I'm looking at comps and things that we can do here. So I'm working with planners just to see the potential of it, right? So there's another person on the team. He's actually local there. He's going to the county and asking them different questions. Oh, what can we do here? There's like wetlands area in the on the property. So he's asking, what can we do with the wetlands? Is it possible to build on it? How close do we have to get? All these traffic studies and things like that. So he's working on that. So different I mean, each person has a different responsibility. Another deal in Kansas that we have, so we have 5 people on the team. Previously, what I was doing is I was picking paint, choosing paint for the apartment complex. Right now I'm speaking with insurance brokers because we're changing our insurance. So that's what I'm doing. Another person on the team, he has experience with financing and he's also an attorney. So he's following the books. He's looking at how much money do we have in the bank, the reserves and everything. So he's reading all that. Then we have another person that's actually seeing how the turn's doing, right? People are leaving, so we're doing some capex on the apartments. So they're responsible for that. So each person has its own responsibility, and it works out great. That's why I have to stress again the importance of the correct team, the proper team, where everybody has its own responsibility. Typically in a syndication, it's a little bit differently. If you have passive investors, they just, they invest alongside with you. They receive the money, they receive monthly distributions, they receive tax benefits as well, but they have no say in day-to-day operations, right? So, but when it comes to the operators, typically in our previous deal, we have a property manager that is doing their thing. Then we have asset managers above it, and I was co-asset managing one of the properties, which is great. I learn a lot. And of course, I'm speaking with investors and raising money. So I'm raising equity and I'm doing investor relations. So I have a specific thing that I'm responsible for, and that's what I'm doing.
Okay. And then do y'all have like a single LLC that y'all operate in, or is it just on a deal by deal basis where you're splitting the GP equity in that specific
Yeah,
LLC for that one
it's
deal?
a for us, it's a deal by deal basis. So we have different LLCs for each deal. My our company, Zontik Ventures, so that's our main S corp. Then you have other LLCs that are basically flowing capital into this company. So what happened is each building or each property has its own LLC, and then this is our main one. So we just have this type of structure, and also each LLC has its own account, like checking account, bank account. So it's easier for our CPA just to see where the income's coming from, right? So you know exactly like 123 Main Street has 123 Main Street LLC, bank accounts and stuff like that. So if anything changes, we got a refi. We're working specifically with that LLC with that account. So other LLCs are not involved. And additionally, if you sell it, it's also very easy. All you do is close the LLC, close the bank account, clean break, right? You know exactly when you sold the asset, and it's really easy for accounting purposes.
Okay. Yeah, I was curious about the 500 doors. Like, how many total properties does that encompass, and how many properties have you done full cycle?
When it comes to yeah, actually it's a little more now than 500, but my very first deal was 208 doors, and then it was 40. Then we purchased 39 beds, that's student housing in the Carolinas. Then we got some built to rent stuff in Boone, North Carolina. Then we got that land. Even though there's units on it, there's total of 7 doors. I think 3 buildings, 7 doors. Um, I believe, yeah. And also the latest indications I have worked on. Past November, we closed on 419 units. Um, then in March, we closed on 128 doors in Dallas. So it's right now I can't talk about the upcoming deal, the 506B, but yeah, there's few things coming up. So that's the deal so far. I don't think I'm missing anything. Okay. Well, what's the other part of the question?
Oh yeah. Oh yeah. How many have you actually sold and gone full cycle with?
Right. Yeah. Good question. So myself personally, none. But that's why I picked the team that did. So on a previous on a deal that we've done previously, there was a very experienced team. They've done over 15 deals in the past 5 years, three full cycle, um, vertically integrated, have nearly, I believe, 6,000 apartments, 350 million of assets under management. And the second team is extremely experienced as well, has ground up development experience, also purchased properties or have been involved in properties in, I believe, 6 states. uh, can sign on a loan right now. Just last year, done 9 deals in 1 year, including storage, like I said, ground up development, multifamily, and triple net leases. So very experienced teams. So if where I'm lacking, I'm relying on their experience, and they help us to grow together faster. So whatever they don't know, I know, or and vice versa. So that's exactly how it works. That's why I like working in a team better.
Okay. Yeah, that makes a lot of sense. So you said you have a deal coming up that I understand you can't go into details about, but what are you seeing in general? You said like you're underwriting 6 deals per day. So like in today's high interest environment, it's August 22nd, 2023. Um, what are you seeing just to make the numbers work? Because I know there's a lot of loan assumptions and other different creative ways to structure deals. What are you looking at?
Yeah. After seeing we were targeting C-class properties, right? Like value add-on stuff. But we noticed that the prices of them haven't decreased with the increased interest rates and of course insurance and taxes. So we now are focusing on higher class assets, BA class. So the previous one we purchased was a B class asset. Now we're working on an A class. So because the prices are fairly close. If you look at the overall picture, the newer asset, you don't have that much capex. You can add some things to increase the rent. Of course, you need some value add-on opportunities here, but at the same time, uh, buying C class now, does it pay off? I don't know. I'm looking at a lot, and with the debt and how expensive it is. Additionally, with the way the rents are, right? So the rents have, we all know, dropped. I mean, they still going up, but the growth has decreased. So we just can't justify putting so much money into a unit, and we can't get the rents to basically cover the expense. So right now we're looking at the newer class assets. Yeah, we are looking at less risk. So we trying to get out of the risky situations as much as possible, you know. We're looking at good areas, no flood zones. Um, we considered some flood zones, but we really don't like them. Right now, we're focusing on we kind of exiting coastal areas as well. Um, it's just much more difficult. It is. I mean, you see how Florida is. Right now, I think Miami has the highest insurance. What is it? 2,500 per door, if not more. I even lost track how quickly the insurance jumps up. So initially we were looking at Tampa, Orlando, Sarasota. I mean, Lakeland. I know they're not, you know, coastal, but still insurance is incredibly high. And then you have what is it, hurricanes and stuff, and the wind damage, and it's just too much. So we're kind of switching our focus maybe to Midwest and more inland when it comes to Texas. Yeah.
Okay. But what, in terms of like underwriting, what interest rate are you underwriting? What cap rate are you trying to buy at?
When it comes to cap rates, I listen, I don't even look at the cap rates anymore because they're just all over the place. In my opinion, the most important metric is the exit cap because that just kind of controls it. Entrance cap, I'm not even looking at it anymore. It, my good, a lot of people go for the price per square foot, which is fine. I just look at the price per door. It's just kind of easier for me to gauge where I have to be. So I mean, just on average, I think the caps obviously, you know, opened up. I think we're looking at what, 5.5 now. Um, but like I said, I'm not even looking at the caps. I think they're 5.5 nowadays. So when it comes to debt, that's a good question. So we like to look. Well, of course, we go with agency, right? Because bridge is just ridiculous. I think it's 10 or 11. A few days ago, Fed hiked up their rate by 25 bips again. Right now, the latest quote from Fannie we got was 5.5%, which is not bad, right? 65 LTV, and that's the loan we got. We also locked it for 7 years. Obviously, we're gonna do our best to exit before that, 3 to 5. That's our projected hold. So if you look at the rates, I mean, yeah, they're definitely higher, but they're doable. Listen, I'm thinking of it this way. Ultimately, if the seller wants to sell, it's their problem. Drop the price, adjust the price. I've been telling people, you know what I do? This is what I do. I actually did this with a seller a week ago. I gave him a price, and he goes, "No, I'm looking at 30,000 per unit higher." I sent him my underwriting, and I said, "Take a look at my model. Please make a correction. See where my numbers are incorrect. Make a correction, and I'll come up to your price. Find me insurance that is, better than what I found. What about the property taxes? Why don't you call the assessor's office? Whatever you have to do, make a change in my model. Here it is. I'm completely transparent, and let me know what you think. If you can fix it for me, if it's going to cash flow for me, I'll buy it at your price." I haven't heard from the guy in a week. But hey, listen, but I'm being completely honest and transparent. I'm here to buy. I'm ready. I'm okay with paying what you're asking, which is just, it's not going to cash flow. Just today, funny thing you ask. We looked at a deal in February. Now it's August. They were trying to sell the deal. It's in Dallas. They were trying to sell the deal for 50,000, for 50 million. We offered 35, right? Right. They were like, "Nah, this is ridiculous. We have so many other offers. Oh my gosh, we're gonna sell it. This is nonsense." Guess what? This deal literally came in my mailbox today, few hours ago. Guess how much they're trying to sell it for now? 37 million. So
Huh.
obviously they couldn't sell it before. Now 37 million, right? So we were giving an offer basically within that range. They didn't sell. Guess what? We're going to look at the numbers again, and based on, the rates and everything that's happening now, our offer will be even less. We didn't look at it yet. We just literally just got it like an hour ago. But I guarantee we're gonna, it's gonna be less. And the funny thing is that they will still hold out. They're like, no, 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 we're just gonna ride it out. And that's exactly what's happening. People don't want to sell. They're being, I understand they want the highest price, but unfortunately, it's not the market for it. So
Yeah, definitely. I see that across the board. I think it doesn't matter what property type. It's just a lot of stubborn sellers that want it to be 2021 and trying to bend reality into what they want it to be. It's not going to happen then.
it's just funny.
Yeah. Huh. Okay. I was going to ask one more question here. I forgot about it. Let's talk about though the usual like kind of targeted IRRs over your 3 to 5 year hold periods and other kind of returns that an investor could expect on the passive
Yeah.
side.
You know what I've noticed, and what I started doing, or I shouldn't say we started doing, I shouldn't say I. Um, in right now, there's a lot of uncertainty, and of course, investors want to know and they want to be safe when it comes to the investment. No question about it, especially now, right? So, like I said, we are targeting higher class buildings, newer assets, and we have noticed that investors like distributions right away. A lot of them ask me, "Hey, listen, when are you distributing capital?" And I said, "Well, we as soon as we close on the last two deals, we're doing distributions monthly, and after a full month of ownership, right? So we purchased an asset in March. Month later, we started distributing cash. So it works well. A lot of investors like that, and we like it also. The biggest thing that we are trying to do here is build up a lot of reserves. I know stopping distributions is, a lot of people, well, some say, yeah, it's perfectly okay. Yeah, you can stop distributions, sure. Um, I just heard this funny thing. You're not really stopping distributions. You promised to distribute excess money. If you don't have any excess money, there's nothing to distribute. So technically, you're not stopping distributions because there's nothing to distribute. So it's kind of a interesting way. I was at the networking event, and one of the operators presented it to me because he goes, "Well, I have no excess money. I mean, I have no extra money to distribute." So I kind of paused distributions. So it was kind of interesting the way he told me. But yeah, we like distributions right away, monthly, and that's what we've been doing. So on the last two deals, we never had a capital call so far on any of the deals that I have been involved in. Like I said, we're very, very picky when it comes to deals, especially uh, because my wife, she's being a commercial property appraiser. She really tries to, I should say, kill the deal, right? Instead of making the deal work, she's trying to kill the deal. And if she cannot kill it, then we definitely in it. We re-underwrite all of our deals all over again. So even if a partner comes over and they were like, "Hey, listen, look at these numbers. They're great, right?" I'm like, before I was like, "Oh yeah, they look beautiful." Because typically right now we're targeting 7% cash on cash. And they've been, you know, they are okay with that number, with those returns. And when it comes to IRR, we're around 15 plus. That's the targeted. Just today, I got a report on one of our properties in North Carolina that we're gonna hold the distribution for 1 month, but then closer to the end of the year, since we're already 100% leased and our target rent was 2,800, but we already on average 2,900. We're going to have a bonus given out to our investors. So that's going to be really, really awesome that we exceeded our year one pro forma, which is I'm just super excited over it. So I already see, even though in this market, with these rents, in this economy, you see if you underwrite correctly, if you really buy good assets, you can have bonuses. So, and we will have it in November or December. That's what the team just said literally 10 minutes ago. Well, not 10, but before we started this. But yeah.
Okay. Yeah, that's actually what my other question was whether or not you're distributing. So like how many properties are you still making distributions on, and how many are you kind of pausing or withholding distributions?
All of them are distributing, literally all of them. On one in the Carolinas, we paused, and I'll tell you why. It wasn't because of us. It's because of a lender. So we just learned about this. It was a gray area. We learned that the lender during a particular period did not allow distributions, and it was basically they thought of it one way, we thought of it a different way. If you have questions about it, email me. I'll let you know what the lender says. It's like I have a whole paragraph. But basically, during a particular period, they want us to hold distributions. Not that we're not cash flowing, we are. It's just literally because of a lender caveat. So that's why I mentioned we're gonna pause them for a month, I think, or 2 months or something, and then we're gonna distribute all the capital that we're holding back and a bonus on top of it. This is the only time that we pause distributions on the deal that I was involved in. All other deals are doing fine, and they're distributing money as promised. We never had a capital call or pause distributions previously. Yeah.
Okay, great. That's definitely encouraging. So if people want to reach out to you, like what kind of person are you looking to get in touch with and build a relationship with?
Yeah, it's funny. I'm networking a lot. Uh, some people say I'm everywhere. I think I could do more. So I'm trying to help others as well. So I'm spreading the word, of course, on the power of real estate and on the power of multifamily, especially on the advantages that it offers, on tax strategies and savings, on of course preserving your wealth. Um, so I'm at a lot of networking events and I'm speaking with people that are looking for all kinds of stuff. Few people are looking for self-storage facilities and they're looking to buy right now. So if you have self-storage to sell, reach out to me. I'll make a connection. Additionally, like I said, we're selling land in Florida. If you're a developer, if you're looking for multifamily land, reach out. I'll sell you ours. And of course, most importantly, if you're looking to get into multifamily deals, some deals are accredited, some not accredited. Of course, with accredited investors, we advertise. Past two deals were not accredited. There were 506Bs, so we did not advertise. There were very, very tight circles of investors. A lot of our investors come back. Typical investor brought in over $180,000 because they trust the team, they know the team, solid operators, and we basically whatever we promise so far we have delivered. So in many cases the investors keep coming back, so we have very, very little spots, if not at all, on many of our deals because they're like, oh yeah, we want to reinvest. Oh, we want to have a 1031. A lot of people don't take 1031s. We do. They have to be fairly large. I would say a million, somewhere in that range. But yeah, we take 1031s as well. So I'm just looking for connections. I'm looking to help people, point them in the right direction. You're looking for mentorship, I'll point you in the right direction. I'll make a connection. You're looking to sell, I'll do the same thing. Buy, absolutely. So I'm just, I love real estate. I really do. It's just so much fun. It doesn't matter whatever the market is. I'm just really, really excited over it. It's just a lot of fun.
All right, perfect. Well, sounds like you were the perfect guest for the show, so I'm glad you came on. Is there like an email or a website that you want to give out to people so they can
Yeah,
contact you?
yeah. My company is Zontik Ventures, Zontik Ventures. Reach out to me. I send a newsletter once in a while, and of course, if we have a call and you on our sophisticated or 506B list, I'll send you a few deals if we have them in the future. Additionally, I have a very unique name, Vlad Arakcheyev. I don't think there's many Vlads Arakcheyevs in New Jersey or in the United States anyway. So reach out to me on Facebook, LinkedIn, on social media. I'll reply. And hey, listen, if you really, really, really want to get my phone number and stuff, you can really Google me. I'm a real estate agent, and when it comes to realtors, all our information is public. So if you really want my information, yeah, reach out. I'm here to help.
Okay, perfect. Yeah, I'll put a couple of those links in the show notes. ZontikVentures.com. It's Zontik with a K at the end, no
Yeah,
C. So great. I will include all that. And again, I appreciate your time. I think it's been really helpful, even for me personally, in trying to put together my first commercial real estate deal. So thanks again, and we'll have to do it soon.
of course. Thank you.
Hey guys, I appreciate you taking the time to listen or watch this episode. As you might have noticed, we don't run ads, but what I would like you to do is just subscribe to our YouTube channel. That would help us out tremendously. You don't even have to leave a review, but if you do feel like you would gain a lot of value from this episode, feel free to share it with your friends and comment, like, subscribe, all that. But subscribing to YouTube would be what helps us the most. That's the only thing I ask. Thanks a lot. And if you do want to get in touch with me, feel free to email me at mason@scalablerei.com. Thanks a lot.